First, demand is strong, but that's across our breadth of product categories. We have 9 out of 10 categories that are growing market share in the last 3, 6, and 12 months. And that's translating to pretty strong bottom line. We grew earnings versus a year ago despite significant increases in commodities and transportation. And as you indicated, those results allow us to reconfirm our guidance for fiscal year, which ends in June. Fiscal year bottom line, increase our estimates on the top line, cash productivity, cash return to share owners. And I really want to call out our broad organization, certainly the supply organization, who's done tremendous work to keep us in supply under very difficult conditions, but also our innovation organization, who's providing the kind of product performance that allows us to take marginal pricing to help offset these commodity costs.
Jon, the organic sales growth last quarter was good, and we talked about it. It was the first quarter, so I don't know whether for the full year you didn't know if it was repeatable or whether you have more clarity now. But that's, the amount of stuff that your company sells around the world. If you go organic sales growth from 2 to 4%, where you were previously, to 4 to 5, that's significant. So what changed there in terms of being able to say that now?
One more quarter of business and very strong results.
So as a result, you can do that. And a lot of that is that consumers are willing to pay up for what Procter & Gamble is offering, because half of the sales increase was in raising prices.
Well, importantly, half of the top line increase was in unit volume, which speaks to innate demand.
Okay.
But on the pricing topic, our business model has a normal component of pricing. Pricing has been a positive contributor to our top line for 17 out of the last 18 years, 42 out of the last 45 quarters. When you have a business model that's founded on innovation that provides higher levels of delight, solves problems better for consumers, you're able to charge a little bit more. And then, while it's very early for these commodity-based price increases, to date, we see very positive signs, probably 20 to 30% less price elasticity than we were expecting. And if you look at, for example, private label market shares, private label often being the lowest price offering in the market, they're down in both North America and Europe. So I think there's a real push to quality products I know and trust that can do the job I need done for me and my family.
Hey, Jon, let's talk about headwinds. And you've got to you roll it all into one number, but let's break it down a little bit. So, freight costs, see where oil is. Forex is not a tailwind now. Forex is a headwind. And then the input costs and commodity prices. What you said, $2.4 billion last time you were on, and people that made some news because I think you had been at 1.9. Is it above 2.4 now for your forecast as inflation has continued?
So I'm going to give you a slightly different number, but the combination of commodity costs and transportation costs are now up to a $2.6 billion headwind. That's up incrementally versus the last time we talked. And as you indicated, Forex has turned from basically a neutral position to a headwind as we worked our way through the quarter. The organization is doing a tremendous job on productivity across the income statement, up and down the balance sheet, which is enabling us to offset a significant portion of these costs. Pricing will provide some offset. And then just very strong innovation that continues to grow markets. Globally, the market has grown 5% in the last 6 months. And that doesn't just happen. It's not just an accident. It's a lot of hard work on the part of a lot of smart people to provide better solutions to consumers around the world.
Hey, John, we've heard from people like Jamie Dimon just about the strength of the consumer right now, how they have more money in their bank accounts, how they're willing to spend more, how they've been pretty flush. What do you see? I mean, pricing power certainly suggests that it's a strong consumer, but we did have things like the child tax credit end in December. Have you continued through January to see that same strength of the consumer?
Demand has continued to be strong. Jamie has a little better insight into the totality of that, but what we see at the store is very encouraging. And that's not just in the U.S., that's in Europe. We had a very strong quarter in Latin America, up 15%. So there is, and it's not that surprising because the products that we offer are relevant as people spend more time at home, more meals at home, more dishes washed, and as they work to protect their family against the health threat that we've all been managing against the last 2 years.
Shepard Smith here. Thanks for watching CNBC on YouTube.